It appears like a rally that's coming out of nowhere. It appears like everything is going up at the same time. But there is one catalyst for all of this, and that's Ethereum. Because even though the altcoins are up today and Bitcoin is reaching new heights, potentially going to 140K at one point, we talked about this in prior videos, it's actually not the altcoins that are driving all of this. What we're seeing here is the others dominance. So this measures how much of the entire cryptocurrency market cap is in the altcoins that are not in the top 10. So you can see what are the small altcoins relatively doing. And while the altcoins of course are up today, they are not necessarily outperforming everything. What is outperforming though is Ethereum. So this is the Ethereum dominance. We have seen a massive bounce. The support that we have formed in September of 2019 got respected. Enough investors understood that Ethereum is sufficiently cheap at those prices. Now, this is not a support line that I've drawn after the fact. It's actually a support we talked about several times on this channel. Check out this video. Don't be stupid with Ethereum, or this video, a historical chance to buy Ethereum, or this one, are people sleeping on Ethereum? This one, is Ethereum a buying opportunity? Is this Ethereum's big moment? All of those videos tended to outperform the average video on this channel. So the average video is in gray and the video performances are in blue. And so I hope that by watching this channel, you have taken advantage of this rally, that you actually invested in Ethereum as I am. I bought the dip before this rally. And so here's the proof. We are talking about the support a while back. But this then leaves us with the ultimate question. How much higher can Ethereum go from here relative to other cryptocurrencies and of course also relative to the US dollar? It appears as if the answer relative to the US dollar is somewhat straightforward, because this is Ethereum's long-term price and it seems like somewhere around $4,000 we've got somewhat of an invisible ceiling. So it could still go up by 82%, but maybe then the air is getting thin again. But what is actually going on here? Why are the altcoins all automatically going up together with Ethereum? There is a reason, and that reason is over here. Have a look at the Ethereum chain with its trending tokens ordered by their liquidity pool sites. The liquidity pools are all versus wrapped Ethereum. So what does this mean? It means that the prices of those altcoins are not determined in US dollars, they are determined in wrapped Ethereum. So the price is determined by the ratio, how many wrapped Ethereum versus how many of the altcoins are in a liquidity pool. That means when Ethereum goes up, say by 10% in US dollars, then the altcoin automatically also goes up by 10% in US dollars. There needs to be zero trades happening in the liquidity pool because again, the price of the altcoin is determined by its ratio relative to wrapped Ethereum in the pool, not by its price in US dollars. And so that's why all of the altcoins here are going up. It's simply wrapped Ethereum going up. And then when some people get excited about a particular alt, of course that alt can outperform. But the default baseline is the 19% that Ethereum went up today. That's at least how much the altcoin should appreciate today. If it didn't, and it's mainly listed on the Ethereum chain versus wrapped Ethereum, that means the altcoin actually saw selling pressure. People sold the alt. So say when Chainlink or when Memecoin isn't outperforming those 20%, some people are taking profit. Now, why have I been that bullish on Ethereum in those prior videos? The reason is a valuation. The Ethereum dominance is now at 8%. So that means 8% of the entire cryptocurrency market cap across all assets is now Ethereum. And we saw the bounce from 7%. However, half of decentralized finance capital is in Ethereum. Yes, that's not necessarily growing over time. So the blue area is Ethereum, but still, it doesn't make sense that Ethereum is only half of cryptocurrency's market cap when it's that dominant in decentralized finance. Now, some people might make the argument that decentralized finance has also a lot of inherent leverage in it, and that maybe not all the value that's in Ethereum is 100% backed with something. But we actually see the same kind of ratio, maybe even a better ratio in the stablecoin market cap. So here are the stablecoins. 51% of all of stablecoins across all chains are on Ethereum. Now I've actually got my doubt that all of the stablecoins that are on Tron are 100% backed. I believe there's a lot of smoke and mirrors on the Tron chain. I believe at some point this could implode. For example, the Bitcoin tokens that are on the Tron chain never have been proven to be backed. Justin Sun never showed us what kind of Bitcoin on the Bitcoin chain correspond to the holdings on Tron. That was always kept in the dark, probably for a good reason. I've got the suspicion that something similar might be going on for the stablecoins. If that's true, then the Ethereum dominance of stablecoins is even higher than 51%. There's a case to be made that even a lot of the stablecoins on the other chains aren't really inherent to the chain, because very often stablecoins just get bridged over to the other chains. And issuers like Circle or Tether might not allow for direct redemptions of the stablecoins on those chains to the fiat system. Very often, a lot of those stablecoin issuers only allow the bridge directly to Ethereum. So it first gets issued on Ethereum, then it gets bridged over to another chain. So we might see some double counting of stablecoins. But really, the physically backed stablecoins, the physically backed US dollars, they are on ETH. And so here's the big chance of crypto in this cycle, when regulation is relatively lax, when Trump is allowing everything. And that is real world assets. It might not necessarily be buying the skyscraper in New York, but it could be just buying into the S&P 500, say an S&P 500 ETF on the blockchain. We've already got physical gold on the blockchain. Having an ETF on all of the US stocks on the blockchain might make sense as well. It also circumvents insider trading, right? Because that's always a problem with stock purchases that are anonymous. If you can buy anonymously Microsoft stock or Apple stock and you've got insider knowledge, you could take advantage of that knowledge. And that's what traditional finance systems prevent us to do, at least to a degree. That would be completely gone with the blockchain. But if you've got aggregate assets, like an ETF on an entire index, I don't see a problem why this shouldn't pass a regulatory oversight. But we are still early with this. And currently, the vast majority of real world assets are just stablecoins. To be more specific, it's 96.6%. And yes, there's 1% commodities, and that is things like Pax Gold with a market cap of 781 million. But I don't see a reason why there cannot be a VOO or an S&P 500 token on the chain. And if that's where the world is going, then where will such a token be launched? It's probably not going to be Tron. It's probably not going to be Avalanche. It's probably going to be Ethereum. Is BlackRock really going to launch its S&P 500 blockchain ETF on Solana, where we've got mainly Memecoin trading? Or is it more likely going to launch on Ethereum, where there's already the majority of stablecoins, where there's already Pax Gold and Tether Gold, etc.? I think the latter is more likely. And so yes, it's true. Solana does create more revenue in trading fees. In the last 24 hours, for example, we saw 3.7 billion of trading volume, of course, mainly in the meme coin space. On Ethereum, we see less trading volume, only 2.4 billion. And the main reason for this is gas fees, right? It still costs more to transact on Ethereum than it does on Solana. There might be some upgrades over time that go beyond just layer 2s, but right now Ethereum is comparatively still expensive. But if you believe that the serious money will rather prefer Ethereum for its safety over other chains, over Solana, for example, then I think the current market dominance of 8% is still rather low. The staking program for Ethereum is also quite stable. So the long-term investors in ETH are not withdrawing their funds. It's not growing anymore. This was a big reason for concern in Q3 2024, but at least we don't see this shrinking either. So we don't see how the Ethereum is getting sold off. This is just ETH that's now locked up and securing the chain. Now here's Ethereum relative to Bitcoin, and it does imply that we could outperform the largest of the cryptocurrencies by 140–150%. Does that happen? Of course, nobody knows. But right now, it still seems like we are comparatively cheap, despite this massive rally today. Here's something I haven't shared that often on this channel. I actually studied investment management. I studied financial analysis That was in Hong Kong. That was for a Master of Science. But a lot of the things that I learned at the time, I had to unlearn afterwards. There are a lot of misconceptions that are present in academia that don't apply to the real world. For example, the idea of efficient markets, that the current price that we see for any asset is already the balanced demand and supply of the asset. All of the information that's publicly available is already baked into the price. This is definitely not correct, and I've got proof for that. For example, check out the following. This is the YouTube channel of Jesse Eckel, another crypto YouTuber. And he just published a video on how he recently put $10,000 into this dead altcoin. The altcoin was the winner token. The video had been published on the 6th of May. Now here's the difference between most markets and the crypto market. The nice thing about the crypto market is that we can figure out what other people are doing. All the information is public, but that public information isn't used by a lot of people. Most people don't go at length to find out who's buying what, who's selling what. And if we do some on-chain analytics, we can find the wallets of various people. For example, over here, we've got a signal that Jesse Eckel bought the winner token, not for $10,000, but for $10,005. That was on CowSwap, and that was on May 2nd, so 4 days before publishing the video. This is actually what we see very often within the crypto space. Unfortunately, because of the very little regulation in the space, pump and dumps are super common. People buy the token first and afterwards publish a video on the token, hoping for this to garner some attention, hoping for this to push up the price, which to a degree works. It works better in a bull market than in a bear market, but especially for small cap cryptocurrencies, it still works to a degree. And so check this out. This is when Jesse Eckel bought. So he bought for 0.64 cents on the 2nd of May, and the subsequent 2 days, not much has happened. Then for whatever reason, on the 5th of May, the trading volume went up a lot. And my suspicion is, I don't have proof, I'm not part of his premium group, but my suspicion is that he talked about the token to his insiders just 1 day before publishing the video. That was then when the inner circle got in. And then subsequently on the 6th of May, when he published the video, the price went up further. So since he bought, the price went up by 22%. And so obviously all the public information, as in Jesse Eckel buying into the token, was not baked into the price at 0.64 cents, because most people were not aware of that public information, because most people don't go at length to figure out who owns what wallet. And so we are not the only ones that follow this strategy. There is an entire YouTube channel just dedicated to tracking wallets, and that's Across the Rubicon. And in an ironic inception kind of way, we are tracking Across the Rubicon as well. And they bought, for example, the Trump token, and that was at $3.36. So here is their YouTube channel. They've got 141,000 subscribers, and here is Trump. They basically bought the token in the first 4 hours after launch. They got the massive gains. It's all about being early. The price went up by more than 1,500%. And the vast majority, right, the people that aren't following crypto that closely, they lost. And so when people tell me that crypto is just random gambling, here is proof that it is not just random gambling. Yes, there is a luck component involved, obviously, but there's also a skill edge. And that's why money concentrates towards a few winners over time. Most people lose, but the people that put in most effort, they win. And it's not just about wallet tracking, it's not just about being early, it's about understanding supply and demand in general in crypto. Most people, for example, overlook tokenomics. They don't really understand the supply side, but price development is supply versus demand. For example, this here, this is the balancer token. So this is a very old decentralized finance protocol. And sometimes it goes up, sometimes it goes down. But when it goes up, it tends to be because all of crypto is going up. It tends to be just Bitcoin appreciating and thus helping the altcoin market as well. When we look at Balancer relative to Bitcoin, the price development is way more clear, right? Balancer tends to underperform Bitcoin, and we can again make money from this. So that's also not common knowledge. We don't have to make money by betting on rising prices. We can make money by betting on falling prices. And it doesn't have to be the falling US dollar price. It can be the falling relative valuation. So if one token underperforms Bitcoin long term, as did Balancer, we can make money from that underperformance. We can make money from the relative valuation, not just from the US dollar price changes. So still, up to this day, we can make profit as this chart continues to go down. And this is much easier to bet on than trying to figure out what next meme coin might pop. Now, why is Balancer going down consistently like this? Again, it's tokenomics. It's simply the supply expanding very quickly over time. And if demand doesn't grow as quickly as supply, and the supply is broadly dispersed into many holders' hands, we tend to see continued selling pressure. Of course, the price in US dollars can come up when Bitcoin goes up, but we are not betting on that. We are betting on the relative valuation. And so this is what I strongly believe in. I think the more we learn about a market, the more skill edge we have. And in the end, since we have both skill and luck involved in crypto trading, if we have enough skill and if our sample size is high enough, we tend to get more and more gains. So we maximize our expected value. Or in online poker terms, one would say our EV. I used to play online poker actually professionally. This is how I paid for my studies in Hong Kong to begin with. So I was half of the year in Gibraltar, the other half I was in Hong Kong, and I was studying in Hong Kong for that financial analysis degree. But yeah, I've published more than 100 tutorial videos, for example, on how to make money by shorting altcoins, how to do the proper risk management without getting liquidated, how to make money by relative valuation shorts. So that's that video. It's 42 minutes in length. Then there's another entire tutorial section just on how to find various influencer wallets. So this is how we know why Jesse Eckel bought before publishing the video. We are tracking various influencer wallets, more than 500 in total now. And there's an entire course just on how to find influencer wallets. For example, through the NFTs that they are holding, for example, through the centralized exchange deposit addresses they use, for example, through related transaction wallets. There's many different approaches. And we then discuss those approaches and we share our findings in the wallet research chat. So yeah, for example, here is a post of how CryptoGains talked about the Champ token, and we knew before that. Just another example. And so here's our influencer trade channel. So here we see when people pump and dump tokens. So Kyle Chessy, for example, is currently de-risking. He's selling a lot of his meme coins. So feel free to check it out. It's currently $125 US per month. The link is down below. It's thebitcoinstrader.com. There should also be a link directly on this video here on the right. So feel free to just click on that. It will lead you directly to the sign up page. If you got some value out of this video, feel free to give this a like. It helps the channel grow. Feel free to also subscribe. I publish videos regularly. See you next time on YouTube or see you in premium. Cheers.